Hey, what's up, everybody? Welcome to Froggy Stocks. Nothing I say is financial advice, entertainment purposes only. I'm not a financial advisor. Everybody on Twitter, bear market, bear market. Yes, we're in a bear market. We've officially entered the ranges where you can say we are in a bear market. I hate when people tweet stuff like that. They just post, we're in a bear market. Because when you're an influential person and you're talking to tens of thousands of people that might not understand exactly what you're saying, people get scared. They decide, oh man, they said it's a bear market. I better get out of my play. You don't want to do that, and I'll tell you why. This bear market situation is something that we've specifically called coming for a long time. I tweeted back in March that I said the Dow was going to go down to 30,000. I personally believe we are going to retrace the pre-pandemic highs, right? Not lower than the crash, but the pre-pandemic highs. We're going to recover all that retail money that jumped into the market, and we're going to start trending again. The reason this is good for AMC is because AMC, GME, HYMC, the squeeze plays, they're not necessarily going to go down much further than they already have. Short interest is maxed out. Utilization's been 100% for months. Shares on loan up to 155 million, I think we had in AMC at one point. Bear markets, though, affect blue chips really good. Netflix is in the absolute dumpster, and it's going to continue to be for a while until they fix their revenue streams. The social media streaming services, that was a bubble. Social media and streaming was this services bubble that was created in turn of a new technology coming to light that people could use to stream movies at home and or social media being extremely popular up until the pandemic time. It's absolutely terrible. So this bubble has popped, and streaming and social media and e-commerce too, they're all taking a massive hit. That is extremely good for AMC, GME, and Hycroft. The stocks that the short sellers hold long, like Netflix, have taken massive losses. This creates a huge liquidity situation for funds like Citadel and Melvin Capital, right? So Melvin, we know, is closing down. They're going to have to close out their positions. Any shorts they had will have to be closed out and or rebought by another firm, which I think Citadel is going to do or has done. I believe the $34 run back in March 31st was probably Melvin getting out of their IWM shorts. You agree with me or not? Whatever. It's just a theory. But the bear market is a good situation for AMC and GME holders. If we do see any lower price action, we know people are going to buy it up. We're already so far into the game that there's no way people are selling, and that's been announced multiple times, even by Gasparino on the news, that retail is not selling. That is a huge problem for the hedge funds and the banks. If people don't panic sell through the dip, through the bear market, then they know that money is going to be pulled away from their shorts during the recovery. And that's where we're at now. I'm going to be buying a little bit of shares on AMC and Hycroft every Friday around noon if the Hoyles method predicts a decent enough price for me to buy for. Pretty much anything under 15 for AMC and anything under $1.50 for Hycroft. I'm going to make stable weekly purchases until this thing squeezes off just to build my position. We're in the dip. You buy the dip, you enjoy the rip. The bear market to me is good news. The hedge funds are going to be hurting. The banks are going to be hurting. And we're sitting here still owning the shares in the companies that have major catalysts out to the end of the year. Major catalyst. 14032 executive order reducing liquidity that can be used from Chinese securities. We have the GME stock split dividend catalyst coming up. We have insane movies coming out that everybody are going to flood the theaters for. We got the AMC credit card. We got the AMC retail popcorn. And we got Hycroft being full-scale commercialized operations by 2023. So by Q4, AMC is going to have 2 new revenue streams. Hycroft will be back to full-scale commercial operations. GME will have had its dividend split. There's all kinds of great stuff coming. The AMC drop occurred. The AMC and Hycroft and GME drops occurred today, and I'll tell you why. They did 2 bull traps. Monday and Tuesday, they let the stock price run to lure people in. We'll use AMC as an example. To lure people into the $13 and $13.50 call options. They got a little traffic I saw on Twitter. People jumped in. Then they reallocated their calls and puts, the market makers did, to set it up for another bull trap, which we had yesterday. Boom. People bought into calls again, thinking it's close enough to Friday. I'm going to make money on this put or on this call on AMC, right? Well, then today they come out and dropped everything back down as they again reallocated the calls and puts that they had in the market to bait people in to let the price run. The price runs with the highest open interest closest to max pain. That's our ceiling. When retail jumps into these weekly calls, Tuesday and Thursday, they do nothing but pay the market maker a premium, and then the market maker makes money on the stock on the way down via their puts. That's why I say don't do it. No options may. Do not buy weekly calls. And remember, if you are buying out of the money calls, deep out of the money calls, remember, if those catalysts fail, then you're going to lose your premium. If you don't have those catalysts to hit those deep out of the money calls, you're going to lose your premium. And the catalyst for the 72 run in January was the last executive order limiting margin requirements. So keep in mind, buying and holding the raw stock, you can't lose. If the price stays the same, you're not losing. If it goes down, you still own the stock. If it skyrockets on a catalyst, you make money no matter what, and you don't engage in payment for order flow. So again, guys, bear market, not necessarily a bad thing for us. We're having more buying opportunities today. We keep floating AMC around $9.99 and $13.50. Hycroft around $1.06 to $1.40. Very good runs. That's why I'm buying the dips and making money on the way back up each time. I'm circulating. Buy the dip, enjoy the rip. Buy the dip, enjoy the rip. And we can predict that almost to the T every single Friday. When the call options fall out of the money, we know what max pain is, and we know what Hoyles is. Max pain is a good place to start, and then we use our Hoyles method off of max pain to predict which price target is the most profitable for the market makers, and that's where we buy our dip. Anyways, you guys have a great weekend. Don't be scared of the bull market. I'm staying in. I'm going to continue to build my position through this bear market until we drain enough liquidity out of the hedge funds to trigger that squeeze. You guys have a great weekend. Froggy Stein.